Decision Plus has been and still is a leading stock market service provider. From training to coaching, we cover it all. Try both our software as well as our coaching site, completely free for 10 days without obligation. No credit card is needed to sign up for the trial. The trial subscription will be automatically canceled for you at the end. DecisionPlus.com, your stock market service center. Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try MarketGurus.tv free without obligation for 10 days in the menus above. Market Vision Plus is the trading companion of so many investors. Make your fundamental and technical analysis easy with Canada's #1 stock market decision-making software. Research, decide, and follow your positions with Market Vision Plus. See the menus just above this program and try Market Vision Plus for 10 days without any obligation after the show. When it comes to day trading, Trader Plus is the right tool. Track 50 quotes simultaneously. Create dozens of quick lists. Display as many as 30 real-time intraday charts at the same time. Watch the action with candlesticks or bar charts as fast as 10 seconds. See the market by sectors. Use the chart models already prepared for you. Try Trader Plus for 10 days in the menu above without any obligation.
Hello everybody, welcome to the Swing Trading Show. Today we're Thursday, August 13, 2015. The question bar is open, folks. If ever you have any questions, feel free to ask them. Today it's a market situation where at opening we were seeing totally flat. The thing is today on the markets, intraday wise, we see how active the markets are. We have a clear bullish momentum that is being installed now compared to yesterday. We're going higher compared to the yesterday's top on all indices. However, on a daily chart, we still see that the markets, Nasdaq, Dow Jones, still remain within that triangle formation. However, the thing that has changed right now is that we're getting at the edge of the triangle formation, which means that whenever we'll have a clearer cycle out of this triangle formation, then the cycle will be easier to trade. If it's on the upside, higher than 211 points, well, there will be some positions to open for swing trading, or you could go with some bullish ETF. If we go on the downside below 207 points on the SPY, well, it's all about bearish ETF or potential positions to short. Especially, I'm talking of the American and Canadian market. I'm talking mostly of the TSX. One particular sector where we might have positions on the downside is the energy sector, where we have oil that is pursuing its decline. Nothing is positive in oil. The fundamentals are still weak. Not enough demand, too much supply. Now, we have here also as well the energy sector that is potentially on the verge of starting a bearish cycle. There are already starting to be some breakdowns in the energy sector. We have a stock like Payson System that is breaking down. Other stocks also in the energy sector could break down as well, such as Precision Drilling below 644. Another stock, Paramount Resources, is also another breakdown. However, the thing is on those stocks, look, a stock like Paramount Resources, it's breaking down today. However, on a yearly basis, look at that stock. It's so oversold, right? So is it a great timing to short that stock? I don't think so. I think the right timing was around this area here when you had the beginning of a bearish momentum, and we had a situation where we at least close to where we had some room to go before we reached the oversold situation. But at those levels, shorting some stocks, I don't think it's really appropriate, even if it's a sector where we might have several breakdowns. And the reasons why I think that the bearish momentum among energy stocks might not pay off that much is simply because look at oil. Even if the fundamentals are still weak, eventually we might have a rebound on oil, and a rebound on oil will help energy stocks to actually rebound as well. So this is actually, technically speaking, I think that we are still at the low of a downward corridor in oil. This might just be the last decline of the week, and we might actually start to have a rebound that will still keep oil within its bearish corridor, but I don't think that right now it's appropriate to, again, short energy stocks. I think you're better off continuing to day trade the bearish momentum of USO with some bearish ETFs such as HOD. But at the end of the day, definitely I close my positions on HOD. I will not hold it overnight. So if HOD can go above $16, that would be interesting, but I definitely doubt that we could have that. But those of you at MarketGurus.tv, at opening, we say that HOD was interesting, but so far we have oil that remains within its bearish corridor. On the other sectors that we have too as well, we have the mining sector that was weak at opening. We have London Mining that could start a breakdown. Tech Resources, again, that's testing dangerously its support. First Quantum as well, that's testing dangerously its support. So it's really a widespread wave of selling pressure that we're starting to have on the mining and also in the energy sector, even if those sectors so far are not generating a lot of new breakdowns, selling signals, I mean. Now, with the situation here, is there a sector, a particular sector on the TSX that is able to allow the TSX to resist and not pursuing its decline? Well, one particular sector that is standing out is the consumer staples sector. And this is a sector where I want to focus my attention today, because this is a sector that is generating several new breakouts. Clear bullish shackle, nice and clear. You have some breakouts such as Loblaw. It's an entry point on Loblaw today, making an all-time high. Look how the stock is actually getting out of an important upward corridor that has lasted for the last 2 years. So it's definitely interesting for Loblaw with a $71.70 as an exit point. You also have COT, which is a clear breakout as well. Exit point whenever the stock reverses that upward trend. So if it goes below $14, goodbye COT. Metro, clear breakout on a yearly basis, breaking an important resistance. It's also another stock that's really interesting as well. So we're going to take a slight break, and I'm going to get back for your questions. So those breakouts that we have in the consumer staples sector are only opportunities for you who want to get a more diversified portfolio, to get into sectors that are less cyclical, more defensive, and add those stocks in your portfolio. And this way you'll be definitely well positioned if ever we have markets that are going down. Well, you'll be well positioned to have exposure onto sectors or stocks that will go down less, because people will always have to eat, and those stocks usually they generate stable dividends, cash flow that makes actually investors less willing to get rid of them whenever there's a panic. And now concerning some news though, we don't really have a lot of news. We had some earnings that came out today. Cisco did their earnings, they did well. Taseko Mines on the Canadian side, they did well. Revenues declined. Amaya Gaming, they beat estimates. Revenues have increased, but the stock still remain within a neutral range. $33 is the go on a stock like that. FaberGen, the stock went up slightly today, but declined after the phase 2A results for the clinical trial. We had some news also on gold. First, what we said on MarketGurus.tv, that you can have access for free for 10 days. At the last show, the 3:30 show, what we said is that if you have open positions on the gold sector, when the sector confirmed its bottom here in the last 2-3 days, you had to take some profit, because technically speaking, the gold sector was reaching a downward trend where we could have a correction. Today, this correction is being confirmed today because gold is losing 0.75%. Adding to that, there's a news on gold saying that the demand for gold is the weakest demand in the last 6 years. And this shows that China, India, which are the biggest buyers of gold, are actually not buying as much of gold. So this is actually creating some selling pressure. So far, if you bought some positions, you were not able to take some profit. It's unfortunate. The trend is still maintained, the upward trend, the short-term upward trend is still maintained. Therefore, if you have not taken some profit, you should continue to hold on to your positions on the gold sector. Concerning the gold sector, I want to mention particularly two stocks. Barrick Gold today, the stock is going down not only because of the technically speaking, because it is reaching its downward trend, but also because Moody's today has decided to downgrade their debt, because Barrick Gold, they say that even if they're selling some assets, that the proceeds of those sales will not be enough to be able to pay out the $10 billion debt that Barrick Gold has. So this is actually creating some selling pressure there. And if you have a stock that is still keeping its short-term upward trend, don't forget, the trend is your friend. So there's no need to close that position. We also have Sprint Nextel. We thought it was a stock that could have been active today, but the stock totally disappointed us. We wanted to see the stock breaking 410 to be a clear buying signal for day trading, because for swing trading we still have this downward trend that is there. Now, the fact that it's stabilizing, that it has not been able to break out 410, does it make it a stock that we should not watch? Not at all. We actually have a clearer sideway formation. The thing is, I doubt we could have this buying volume that could allow the stock to go higher, because on that increase though, we have seen weakening volume. So that shows that the wave of buyers is not consistent enough. The stock only went up because they got some investment from SoftBank, which is a Japanese company. So I think we're due for a stabilization phase, and whenever we can break 409, that stock will be a great buying signal. But so far, it's not a buying signal. I think it's more due for a correction, because on this rally, we had a declining volume on a stock like Sprint Nextel. Knight Therapeutics released their earnings. It did well. Bankers Petroleum as well. But the stock right now is testing its support. Could be a potential breakdown. It's not a stock we would short because it's actually at $2. Usually it's $5 or more that we like to favor to short, because the margin requirements are better. And Pacific Rebels, they miss estimates. The stock continues to keep its upward trend. Element Financial, they were in line. And Great Canadian Gaming, they miss estimates, and the stock is clearly going down. Really, in Great Canadian Gaming, at this point, that could confirm a bottom, but only if we stabilize for the next 2-3 days at those levels.
Find answers to your questions by emailing your host at btm@decisionplus.com.
5 good reasons to manage your investments with National Bank Direct Brokerage. Commission fees fixed at $9.95 anytime for all clients, and starting at only $6.95 for active investors. No administrative fees if you hold at least $20,000 in your accounts. Registered accounts available in U.S. currency. Powerful tools to help you manage your portfolio. Award-winning customer service and satisfaction levels amongst the highest in the industry. To learn more, visit nbdb.ca or call us now.
Real-time coaching has been created. We search and classify critical reports and technical movements. You can visualize or hear the best buying and selling opportunities. Get real-time advice all day long and 3 live coaching shows per day. Let us do the work and save your time for trading. Try marketgurus.tv free without obligation for 10 days in the menus above.
So welcome back, folks. We have 1 question from Barrett. It was from yesterday. Hi, Chris. Why would you not buy IIP.UN? Thank you. Well, one reason why I think REITs will have a tough time is because of interest rate. There's some fears that the Fed might raise interest rate in September, which will be negative for those companies, because they finance themselves usually in a low interest rate environment. Those companies are the ones who tend to outperform. Now, this is the reason, fundamentally speaking, because of the fear of a potential rate hike in September. Now, technically speaking, on that stock right now at those levels, we see that the stock was unable to break that resistance. We're making a negative top on the stochastics, which confirms that the wave of sellers is being installed. We went lower than this 30-day, 50-day, 100-day moving average that were all staying at 632. But you see that we have still been able to rebound after testing this short-term upward trend. For me, that stock, I consider it still within a big neutral range. For me, I'd like to see the stock breaking 650 to be considered as a potential buy, but only and only if we have the stock that can stabilize first. Because look at this, when the stock broke 650 at those levels, the thing is that the stock was going up for the last 2-3 days, right? So you didn't get in at the beginning of a bullish momentum if you got in on that stock. So this is why when the stock broke 650, automatically speaking, there were some sellers who came in who took some profit. Now the thing is, as I said, I'd like the stock to break 650, but only if it can stabilize. So at least 2, 3, 4, 5 days of stabilization phase and a clear break of 650 before considering that stock as a buy. Right now, I think it's more likely that the stock could go towards 614 or stabilize at those levels because of the stochastics and because the stock went lower than all those moving average, where we could have hoped that some buyers will come in, but the buyers didn't come in and the stock went slightly lower. So there's more bearish momentum on that stock so far than bullish momentum, and this is why I would not get into that stock for the moment. Now, hi Chris, any chance of going back down on the SPY today? Well, look, it's tough to tell is there any chance. So far we still have on marketgurus.tv, we still maintain our bearish view on the markets. We still have several bearish ETF in our analyst shorts portfolio. We still have more short positions than long positions on the American markets. The thing is, we're still within that triangle formation. So we still have a neutral formation. We cannot only rely on the technical indicators to give us a direction. I think it's definitely going to be led by what the Fed is going to decide to do in September. Now, so far, we do have a lot of congestion in the market so far. And look, the thing is, we do have so much false signals because in 1-2 days we're going down. Finally, we had an important rebound. 2 days ago, we had a big decline. Yesterday, we rebounded, and today we're rebounding again. So it's tough to give a clear view. And this is why that within that sideways formation, even if we're recommending several short positions, what we're doing on marketgurus.tv is recommending half position, because we want to be prudent, not put a full position, because it's tough to determine what's going to be the next direction on the market, especially when we're stuck within that sideways formation. Now, AC.A, $12 a buy. I see what you want to do on AC.A. You want to get in on that stock because it's testing its 200-day moving average. It is something that it is a strategy that you could favor. However, you also have to take a look at other indicators to complete your analysis. This is why I don't think that at $12 it's necessarily a great buy, as long as we don't have a stochastics here that can show me there's some buyer's momentum. So far, with the stochastics that is heading towards the oversold situation, it shows a clear seller's momentum. Second thing, this support here of $11.78, $12 is not so well, it's strong, but the thing is, we're not seeing buyers coming in yet, right? In terms of the histogram, so far we don't have an histogram that's much more positive. So this is something that I kind of don't like on a stock like Air Canada. So for me, Air Canada, it has to be watched. I think if it could stabilize for more than 1, 2, 3 days, stochastics could start to head up. I think that will confirm that at $12, Air Canada will be a buy. But at those levels, with the weakness that we have on Air Canada, with the technical indicators that I'm seeing, I'm not so sure that that stock at $12 that will buy it, that I will feel comfortable to buy it today at $12, especially with the stochastics that is like that. So that's my advice on that stock. Now, as for the day trade of the day, it's NAT on New York. Look at that stock here. It gave us several entry points, though. Really pretty nice performance on a stock like that. 1, 2, 3, and the next fourth one is going to be at 15 or 20 on a stock like that. It does have the possibility to potentially continue because the 10-day has not yet crossed the 30-day moving average on the upside, but it could do so. We have a wave of buyers that's coming in, but we need that break. We need 1520 to confirm the clear bullish momentum. And intraday wise, as well as for swing traders, if it goes above 1520, that would be a go. And this is why that stock has been our day trade of the day. So far, folks, markets continue to remain calm. They continue to remain within their triangle formation. It's a formation that so far doesn't allow us to predict the next cycle. We need a clearer getting out of that side of that triangle formation to confirm a clearer cycle, or to trade that cycle with more clarity, I would say. In terms of the sectors, energy stocks continue to remain weak, but I don't think the downward potential would be that great, because eventually oil will have a rebound, because technically speaking it's at the low of its downward corridor. And under TSX, the consumer staple sector is the one that is standing out. If you want to have a more diversified portfolio, I believe that today it's a great timing to get some exposure into the consumer staple sector if you have none. So see you tomorrow on the Swing Trading Show on DecisionPlus.com.